Do people pay less taxes cashing out cap gains from a business crypto account? Discuss the benefits of business crypto accounting. If you file an LLC and you pay yourself a reasonable salary, that's one of the qualifications. So you got to pay yourself somewhere between $50,000 and $70,000 a year to manage that, or you need to, pay your spouse out of the LLC that amount to manage it. That's what a lot of people do. If you file a single member LLC, you might say it's manager managed and put your spouse as the manager and pay them. And then you can take dividends out of the corporation and you don't have to pay the 13.5% tax on that for Social Security, Medicare, and Medicaid, the employment tax, basically. You won't have to pay those on any dividends. So that's a way that you can save some money. But the cap gains, like those are going to flow through if you file as an S Corp. The benefit is you're going to be able to spend the money in a way where you can offset that income. So let's say you go buy a vehicle. And Section 179 of the tax code is software and heavy vehicles or heavy equipment. Anything over 6,000 pounds is considered heavy equipment. So if you buy a jet, if you buy a yacht, if you buy a G-Wagon, you're going to get to write off the full amount of that purchase in the first year, even if you finance it. So let's say you put 20% down on the G-Wagon for 200 grand, you put 40 grand down, but you get to write off 200,000 to get your income. So you basically just saved, if your tax bracket at 37%, you're going to save, $50,000 in taxes, maybe more than that, because you're going to offset another 160 grand in addition to what you had to spend. There's a bunch of stuff. The tax code's there to help you. It's not there to hurt you. If you have a business, they give you lots of legal ways to not pay taxes. But if you are just a person, you're pretty screwed. Like you're going to get the standard deduction. And if you make a bunch of money, you're going to owe a bunch of taxes. So that's why the wealthy don't own anything. They hold it in corporations and trusts or insurance policies, which we also do. And that's how they hold their assets away from themselves, still control everything, but they don't own anything. So nobody can tax them on it and nobody can take it from them because it's not in their name. Yeah, you're still going to have the same amount of tax implications. You just have way more depth in ways that you can offset that taxable income if it's inside of an LLC.